All new tonight, first at 5, the Federal Reserve announced today that it will cut interest rates for the first time since the start of the COVID-19 pandemic. 2 on your side's Natalie Foz is in the newsroom right now with how this could affect you. Natalie?
Mary Alice, economists were anticipating the Federal Reserve would cut rates at either 1/4 or 1/2 percentage today. But many were shocked to hear that they went for the larger cut. So we set out to find out how this could affect the average American. Federal Reserve Chair Jerome Powell announced today a 1/2 percentage point off benchmark rates in order to help grow the economy.
This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%.
Powell addressed concerns when it comes to the balancing act of managing inflation.
We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing restraint too slowly could unduly weaken economic activity and employment.
Dr. Fred Floss is a professor of economics at Buffalo State. He said that this move will encourage people to make larger purchases again, like cars and homes.
What that will do is more people will buy houses, more people will buy cars, hopefully more people will go to school, and that will allow the economy to grow.
He mentioned that this cut will mostly help the everyday person, but could hurt those who are not borrowing money.
The price of buying a stock is now just went up a little bit. You're going to be hurt. On the other hand, if you're borrowing money, so you want to buy a new car, or you're going to be a first-time homeowner and you're going to get a mortgage, well, now those costs are going to be cheaper, so you're going to be helped.
He also anticipates the Federal Reserve will want to wait to make any more moves until after November 5th.
There's so much noise in the economy right now because of the election and because of the candidates saying different things. I think what will happen is they will wait till after the election and see whether or not the economy is growing at a rate that they feel comfortable with.
Dr. Floss did mention that once the election is over, he wouldn't be surprised if the Federal Reserve made more cuts if they're comfortable with the economy in order to avoid a recession. On your side in the newsroom, Natalie Foss, Channel 2 News.